Well, good morning, good afternoon, depending on where you are. It's Mike Smith here with your first daily market update of the week, and hope you all well, had a great weekend. And for those of you who are, g'day Rachel, enjoying school holidays with your beloved offspring, I hope it's going well. And yeah, look, let's get things kicked off, obviously. G'day Ross, g'day Rachel. This webinar is obviously my opinion and not representative of Go Markets. Also noteworthy as it is for educational purposes only, and so what I'm doing is I'm putting some overview charts in front of you to have a look at, trying to explain what's going on and what's driving sentiment right now, and obviously it's up to you guys to make your decisions on trading action. So let's start by, I guess, looking at what's coming across the news right now. Just let me know you're hearing me on and see me okay, actually. That'll be good. Drop a little line in that question box. Thank you, Michael. Cheers, Chris. Okay, of course, Wall Street was mildly negative overnight. Earnings season starts this week, and irrespective of what other headlines go on, there's going to be a little bit of nervous caution in terms of where the markets have moved to over the last week or so, and what earnings may bring. Now, we've got the big banks kicking off things this week, so we've got JP Morgan, Goldman Sachs, Wells Fargo all reporting tomorrow night before the opening bell, and this will move currencies as well, so just be aware of the relationships between equities and US dollar index and etc. Just bear those in mind tomorrow. Obviously next week we get things ramping up significantly once we've got the big banks out the way. We've got some more big banks coming Thursday, Friday. I think Morgan Stanley, Citibank, Citigroup, and all reporting on Thursday and Friday respectively. We've got a few others lobbed into the mix. Got Delta Airlines as well, which isn't likely to be a good thing. But anyway, that's where the market's at. Additionally, we had a positive, fairly positive 10-year Treasury auction yesterday, late on in the session. That's pushed bond yields up a little bit, but the market doesn't seem too spooked by that. So all good. That seems to be relatively settled for right now. But we have got some US inflation numbers out tonight, and that will be a big deal right now, because obviously that's been playing on market minds and impacting on those bond yields over the last month or so. So all of a sudden CPI data is on the radar, so that, along with the Chinese trade balance figures when they come out, and some fairly hefty data coming out of the UK as well, all have the potential just to shift market sentiment a little, at least, particularly in resources, potentially, I would suggest. And generally, if that inflation data comes in strong, then we may well see a little selling in equities. If it comes up as soft as most people expect, then I think we'll be fine. US dollar index is trading close to neutral. Precious metals move downwards back into established ranges, and really that Asian markets to date so far have essentially ignored that weaker US lead. Futures are trading neutral. I mean, last I looked a few minutes ago, we had all of the major indices apart from the Chinese index looking positive right now, but only just so. Plenty of room for change. Let's just have a look at putting some detail behind that. Let's quickly look at the futures to start with. These are very slightly positive. They've really not moved at all in any significant way since market opening. You can see that the FX market is relatively flat as well. There's some interesting action going on with the yen starting to sell off a little bit. So we'll maybe have a look at some yen pairs. US dollar index only slightly positive. Gold and silver pretty neutral as well. So not a lot happening for right now, but there's a couple of things that are of interest. The Nikkei is moving quite hard to the upside. That's the outperforming market in Asia, up over 1%. There with the figures. These are delayed figures, but I thought I'd put them up just to give you a flavour. You can see the ASX only just in positive territory. The Hang Seng and the Nikkei outperforming. Kospi is doing well as well, actually. So even the Chinese index in Shanghai has moved higher as well. So following those early declines, we've now moved into positive territory, and that might be helping just pull the futures up a little bit. If we look at the economic news coming across, there's that Chinese data we're waiting for. In the UK, we've got industrial production numbers, GDP numbers, and trade balance numbers. So a really big day, likely to impact on GB pound quite significantly. We may get a bit of caution into GB pound as we go into that data in about 3 hours time, and then that inflation data tonight, which is going to be quite important, we would suggest, in terms of where the market goes from here. 30-year bond auction is not likely to impact on markets as much as the 10-year did last night. So let's put all that into some chart action. See what's going down. Let's just get rid of this. And we'll start with the NASDAQ, which obviously last week we were talking about it being the outperforming index. Just a little slowdown in the last couple of days, so on Friday and yesterday, of course. Although the futures contracts did close slightly higher than the previous day. You can see we're pretty neutral today, as I've already said, and that's really because we're touching those record highs of around about that 13,880 level that we hit early February. If we look at the S&P 500, we'll look at the 5-minute chart just to start with, just to show you that really it's gone nowhere in Asian trading, trading within a really tight range of around about 4 or 5 points. So really not moving much at all. But again, for context, there's the daily chart, that record highs just keep on getting hit. There's the last week, which was up around about 2.5% from that breakout that we had. And if we just check in on the US dollar index, so obviously that's gonna, so we see that slightly negative down move back into this trading range that we've been in, that we're in sort of February and most of March. Slightly up in today's trading, as you've seen. But what we'll find, or what you'll find with the FX pairs, is a lot of them are trading around key ranges. Certainly with the majors anyway. Here's gold. That's we had a little foray above that key level at 1750 last week, but we've ducked back down into the range, and likewise with silver. Played with $25 for a couple of days before moving back down again between $24 and $25. On this particular contract, which is more forward looking than the one you'll see on Finviz, you can see it is slightly higher. Finviz tends to show the next contract that's due to expire. Okay, looking at some of the US dollar pairs. Start with the US yen on the daily chart. See, we've found a little range over the last 4 trading sessions, which has put us in between 109.15 and 109.80. We had that breakout about 2.5 weeks ago. We had a sharp move higher in the USD, and then that was given all back. So we're really sort of not very sure about where to go from here. Inflation numbers are likely to impact on the USD pretty significantly, and it may be that the market is starting to figure that there could be a move to the upside. If we look at the euro, you can see quite choppy again in Asian trading. Put it on the daily chart. You can see why it's smashing against the resistance of around about 119.21. We did think that earlier on in the session, we actually put it on a 30-minute chart. Earlier on in the session, we might have some momentum to take this high, but you can see over the last couple of hours, we've just lost that momentum to the upside. and are actually now sort of looking downwards. Lots of noise here, so I don't see a massive amount of selling going on past this 1886 level. So maybe 10 or 15 pips to the downside in this at this stage. But if this continues and gathers a bit of steam, we could see it down possibly around about 30 pips. If we just take this out a bit, you'll see there's a more. This is actually not an insignificant line that we're trading at now. But we could see ourselves down, certainly to test that in the first instance, which is 12 pips down, and then another sort of another 12 pips down. So about 24 pips in that to the lows that we hit on the 9th and the 12th. So gathering a bit of steam, which is sort of interesting. Look at the GB pound US dollar. This is one that looked as though it was going to fly this morning. And indeed it did early on, and then subsequently flew down again. We're looking to find support around this 200 MA on the 15-minute chart. So around about that 137.30 level. A break of this could be interesting because you'll see there's not much stopping it to push down to this level here. So that's around about 40 pips or so. Let's just put it on an hourly chart, get a bigger perspective. So that 136.82 level could be where it's heading if we get a breakthrough. Where we're trading at now. Aussie US has been trading in a range now ever since mid-March, so almost for the last month. It's traded in between 75.80 and 76.80, so around about 100 pip difference. We are trading towards the middle of that range, although we are dropping off a little bit with that US dollar strength we've just seen come into the market. So that's what we've done over the last couple of hours after, again, a positive start to the Asian session. The Aussie yen looks as though it wants to attempt to break higher, but we're trading in a range on the short-term chart in about a 22 pip range. Let's just put it on an hourly chart just to get a little more perspective. You can see there, if we break that 83.50 level, we could sort of meander our way up, although it is quite noisy here, or 83.78. So what's that, about 30 pips. Again, we're really struggling to find trades which are moving well in the FX market. We did look at the GB pound Canadian dollar, and this is our chart of the day. Let's just put it on the daily chart to get perspective. You can see what's happened here is that we had a support. We've got a support in place at around about 171.82. This is potentially a bounce off that. The 200 MA is at this point here. And so what we're looking for, we think it'll not only test that, but it'll actually sort of move up a little higher around about this noise here. So we're looking for a move up on this of around about potentially 55 pips. We get cautious and trail stops hard at around about 35 pips there. And but that's our chart of the day. You can see on maybe on the 4-hourly chart, it looks better, a bit like a reverse head and shoulders pattern if we just put it on the line chart, shoulder, head, shoulder. So it's a break of that up to this 173.30, 45 or 40 level that we're interested in. So that's our FX chart of the day, the GB pound Canadian dollar. But it is obviously, there is obviously the need to be patient there, to wait until it's broken through this level that we're trading at now at around about 172.77. Okay. G'day, David. Just have a look, see if there's anything that you guys have put up for me to have a look at. Not yet. Okay, so let's flick to. We've had a look at the US indices. I just wanted to put in play the FTSE. Let's just let it catch up a little bit here. There we go. So you see the FTSE at highs there. Really done very well over the last couple of weeks. Did pull back at the end of the week after just one session closing above that 1920 level. And again, just to put this into perspective, you can see how this is edging ever closer. So this is the monthly chart. So around about, so remember we did drop COVID, we did drop around 38%, and we've recovered about 45% from there. So we've still got another possible 10% upside on if we look at the monthly chart. So a break of this 6920 level could be important. Now there's two things that could help drive this. Obviously we've got that major data going on in the UK, and we've got a continuing relaxation. I think the pubs were hit quite hard in the UK last night. So continued relaxation of lockdown measures as the UK really sort of outperforming getting vaccines in people's arms. So we could see further upside in that. So we don't usually, but we are having an index chart of the day because we think there's enough impetus to the upside potentially to take the FTSE up and outperform the other indices while the US wait for earnings season to kick off. So just bear that in mind as European markets open. It's probably worth a look. But remember, of course, this is a futures contract, so we're already pointing to the upside from yesterday's close. In terms of Asian trading, let's just have a quick look. So Asian trade, you can see it just sort of moving very gently to the upside. Yeah, that looks as though it's setting up very nicely. Okay, on to the stocks on the ASX. As we said, the ASX are only just above neutral. Let me just refresh all. So we'll have a broad look and then we'll hone down on a couple of stocks. We are actually trading towards the lows of the day, somewhat surprisingly, on the index as a whole, but we'll just show you what's going on. So there we go, we're at the lows of the session. And why are we at the lows of the session? Because it's a very sector-specific response in the market today. The two main sectors, i.e. resources or materials, if you like, and banks are generally to the downside. But you can see what's interesting about here, despite the fact that it's neutral, we've got more advances than decliners. So let's have a quick look at what's going on. So we've already, Afterpay, Zip doing very well. Zip came in with some exceptional numbers, and that's helping Afterpay move higher as well. But if we look across some of the banks in neutral, that's actually slightly better than it was before. CBA is the outperformer in the bank space, along with Macquarie, are doing not too bad. NAB's just turned positive. But if we look at resources, let's just quickly check on BHP. There's Bank of Queensland up as well. So there's BHP down 0.7%. Bingo, up 8%. I'll have to have a look at that chart. And we look at FMG. FMG are actually bucking the trend. They're up only slightly by 4 cents. We've seen Energy Week. We're seeing Oz Minerals down 1.5%. We're seeing Rio down best part of 1% there as well. Healthcare are generally doing okay. So we're seeing ResMed higher, Sonic higher, and Fisher Paykel higher. So some strength in healthcare, some weakness in resources, and pretty neutral on the banks as we speak. And there's our favorites. Zero up another 1.5% today. There's a weakness in energy again. Some move higher in Westfarms are pretty neutral, but worth a look at a chart, and Woolworths just continue to edge up as well. but neither of these are looking particularly particularly awe-inspiring. So let's check in on some charts, and we'll start with zero. Now we're in zero again. So as we planned, we took profits on just on our 1, 2, 3, 4, 5 positions that we entered last week. You can see every one of those was a profitable trade. And we re-entered yesterday. Actually, we took profits on the last one yesterday. We re-entered yesterday on essentially, got caught a little bit on this one, but we've got away with it. Let's just take it out a bit. So we had a line in the sand at the high there that we hit in January of 140.58. So we entered around about 141, but it sold off towards the back end of the session after we'd entered it. But you can see we've jumped higher a little bit again. We're expecting potentially some pauses, so we're not going to hang around with this. If it gets up to that 146 level, we'll probably take this one off as well. But we felt we were accumulating into this, as you saw last week, as we described, but we felt that, I felt that this was a market which may just get a little cautious this weekend, so it was prudent to rip it off as it had such a good run. Seeing some continuation of that was positive. If we look at APT, in this trade here, got in a couple of days ago, you can see the take profit. We've now got a cross of the short-term MAs. We've got the MACD positive, not surprisingly. We've got a profit target on this of around about 135, so we see about $10 to the upside from where it is now. Looking quite positive on the day, and that's been held by ZIP, which will just drag on. Quite a healthy pop today, and that's looking better again. You can see that we shot up on Asian trading. We came down a little bit. This would be early profit taken from this lot and for people who were in it here. And you can see now we're getting some buying coming back into it again, which is interesting. And now we've got a candle that looks as though it's going to close in the top third. Be interested to see where this sits in an hour or so's time. But that's on the back of a fundamentally exceptional report from ZIP. So this has got really, we flipped between this, and we also liked, just put ResMed on a line chart. We actually like where this is sitting. Now it's broken this level here and the 200 MA. The only thing that would give ZIP the edge is where that candle is sitting now on RMD. It's dropped back down to its lows of the session. So we're considering that as a potential chart of the day. But if we look at Fisher-Paykel, this is probably one that's setting up nicely as well. You can see we've really had 3 attempts at breaking 31 in the last 4 trading sessions. We see nice upside on this as well, up around about 6% to take us up to $33 potentially. So that's another one that we've got our eye on. So not an unusual state of affairs in that once we broke the 200 MA, we got it precipitated some buying. We got a little pullback to retest that level. And now we're waiting for a close above $31 really, to suggest that may have some more upward pressure. Looking at a couple of others, LYC, one of our favorites. You can see that really once again we've failed to break that 645 level, and so we're just going to have to wait essentially. And BHP just really sort of epitomize resources. We had a move higher last week and another bounce off resistance, and that's why it's called resistance. It's $47, and we've just drifted down since then, looking really as though we could, in the first instance, test around about $45. We may get a response when that Chinese data comes out. ALL, Ross, what's happened to you boys? It's just, whoops. Let me just do a little bit of a screen reorganize here. I don't know what happened there. Anyway, we could just carry on because we're ALL. So looking as though it was shooting for the stars last week. We got a doji candle that was rejected, and it moved up again on Friday, and then we've just got a tumble down over the last couple of days. Now, it's an interesting one. In terms of, let's just pull it out, give it a little more space. So this was a really nice breakout through 35.28. Okay. The fact that so that was the breakout trade there. That looked really good. This 10 EMA would be, if I was in this, that would be my stop now at around about 35.66. Because if it breaks that, it's going to retest. It's going to retest that 35.28. So that's been a. I'm not sure why that's pulling back. There's been no news at all. Maybe a little profit taken because this has moved up significantly, as you can see, since February. There's February's low, so that's up 22% since then. So it may be just a little bit of money coming off the table. Let's just stick some volumes on this. Difficult to tell. Yeah, impossible to tell. Just ignore that. So yeah, that's where I'll be having to stop at this stage. But that looks rather tricky, and it's trading towards the lows of the day, which isn't great. We're looking at the travel sector. That's not doing particularly well either. We took profits on Qantas last week, which was timely because this is essentially what's happened to Qantas since. Yes. So let's just show you. So we took, those are the two trades we entered last week. So we took profits here and here. Yeah, look, it's dropping down. It looks as though it's going to, again, very difficult to pitch a level on this. But this could be an important place here at around about 527 where it's trading now. So what we've got potentially, if it bounces off that level back up to that 550, we've got about nearly 4%, 3.8%. It's going to require some. It's going to require some help to get over that, I think. PLS. This is one we looked at last week. Really, since the breakout, which was here, it's toyed with this level a little bit. It's so it's not moving with any significance. Interestingly, Galaxy, which was the other lithium stock, because this is a battery play, an electric car battery play. So Galaxy, GXY, absolutely smashed through that. So I entered the wrong stock here, obviously. This is where it was last week. So if just put this on the line chart, we were talking about this being the key level in Galaxy. So that was last week, and it's actually tackled these highs. So this could be one to get on your radar. It rejected a move above that yesterday. Now it's doing the opposite. It looks as though it's holding on to this resistance level, but has rejected a move to the downside. So interesting price action on this in the last couple of days. Obviously a fairly low volume stock, but looks as though it's got some, certainly got some interest in it today. So that looks pretty important. Again, look, context is important. Put it back. You can see how this is highs we've not seen since some time. This goes back to January. So if it breaks this January high, I think that could precipitate some more buy-in. And so that's in that space as well, Joshua. Certainly looks interesting for sure. And it may be they pull each other up to some degree as well. But Galaxy is looking slightly stronger. But both are trading around key levels. Retail space, is there anything happening in retail? Good question. No, I don't think there is the question. I don't think retail are performing particularly well of late. Kogan were looking interesting the last time I looked. Let's just quickly pop on a JB Hi-Fi. So essentially JB Hi-Fi hit highs at the end of March there, dropped down back into the range. So really, we're having another pop at this, it looks like. It looks like a double bottom type of formation there, sort of roughly. So JB Hi-Fi, maybe 54 bucks, may get interesting. If we look at Kogan, $13, it hasn't hit that for a little while. Let's just pop it on there. So essentially, Kogan is looking to find a bottom on this. Arguably, this is a reverse head and shoulders, but it didn't break through the second shoulder. So maybe that 1340 is an area of interest. This might be one to potentially accumulate to if it gets any traction, because you've got a next key level around about 4.5% up, and then it's pretty clear space. Let's pop on a weekly chart. And so we've got pretty clear space then up to around about this $16 mark. So that break of 1440 could be very interesting. That's one to keep on the radar for sure over the next couple of days, perhaps. I want to put Macquarie up. This was one of our charts of the week last week. I think it was Tuesday's chart of the week, and hasn't gone very far at all since then. So this was where we talked about it last week. So it looks positive. We actually got in this at the end of that session there. I actually got into this at the end of that session there. So you can see it's sort of stuck around this 154 mark. Now, this will move on the back of JP Morgan's results on Wednesday. So if you are in this, that is a risk or an opportunity, depending on how you see it. JP Morgan have beat expectations the last seven earnings seasons. So that doesn't mean they're going to do it again, nor does it mean the market response to that is going to be good, because there's a few things in play. It might be that they beat expectations, but the market's already priced that in. But that's just the backdrop to holding a position in Macquarie over the next couple of days. So just be aware, if you are in this, there is increased risks as from tomorrow. Okay, so we may well see a little bit of caution. It's not moving very far at all. Yeah, Gary, yeah, I'll pop up Zip again because it does look interesting. Let's just pop it on the daily chart. So in terms of where Zip is, this had a bounce off the 200 MA. You would have been very, very brave to get into this before. I think we talked, Afterpay were looking certainly the stronger in that sector, but that was the level of interest, which it did actually test last week intraday, but this is a candle which says we've got a definite change in sentiment, and put a profit target probably, or a profit target stroke tighten stop at around about 10.34. So a significant potential on the upside. Even to that level, it's around about 12%. Your stop would be, looks as though we're getting the moving average is about to cross as well. So you could use your, if they do, then of course you can start to use your MACD as a, if this turns positive, that blue's awful, sorry. Let's just change that to maybe a lighter blue so you can see it better. There we go. So you can just see that the MACD is starting to turn positive just because it reflects this, but remember this is a 10 and a 20. So if these do cross and we see that signal line pop into the positive territory, then we can use that as an exit. But at this stage, we'll be using this as a this 864 level that's just broken through, somewhere below that as a stop. We can technically, you can see how that makes sense. But of course, we have ducked down, but see how it goes into the close. If we do get it moving up any higher from here, it means there's some more buying coming into it after an initial profit take today. You can see volume is obviously higher, not surprisingly, on the back of that news. So that was our chart of the day. If we look to the US, just very briefly, let's stick on an Apple chart. We talked last week about Apple perhaps making it up to 130. There we go. There's Apple hiding up there. So there you go. So there's Apple bounding ever higher. So we identified this as the key level. It pulled back to that 131.45 yesterday in trading, but around about the midpoint of the range yesterday. So that was a natural pullback with just a bit of market sentiment coming off. Remember, if bond yields start to rise, or inflation numbers start to rise, and that's reflected in bond yields, it will be the tech sector that gets hit hardest. So if it does break that that high we hit around about that 132, where did it close? 132.95. Then we could see a sharp move higher, one would suggest, and some momentum back into this stock. There we go. Let's pop that line there. So there's the lows we hit in February. So that might be a line in the sand there you could use. And of course, the next pause is around about 3% higher. But just what you've got to do, remember, with any US positions, in fact, any positions at all, here's Yahoo's earnings calendar. It's about as good as it gets for a freebie. You can see on Wednesday, there's JP Morgan. There's Wells Fargo. They're kicking things off, and Goldman Sachs. What we're going to do is, just in case you haven't got this, just going to pop it into the link. So I'm just going to pop this link into chat. There we go. So you can access it. There we go. You can see the futures are just continuing to be mildly positive. But just check on that. There is some Aussie stocks on here. If we just put ANZ, for example, just make sure you don't do the any of the OTC markets. Go find Equity Australian. And there we go. You can say May the 5th. So we are moving into Aussie earnings season soon as well. So just start to look at your Aussie stocks for earnings. If you can't find it here, there's plenty of sites on. Just Google the company. If you just put in BHP earnings, you'll find it easily enough. Okay, well, look, I hope that's sort of useful. If there's any last ones you want me to have a wee look at, that would be good. So hopefully there's some things there for you to have a wee look at for the day. Let's do one last quick check of where the ASX is at now. Let's just put on the index. Remember, this is a futures contract, obviously, but let's throw it on anyway. So it looks as though it's doing okay. We've broken out of this range last week. We've been in for an eternity ever since sort of the beginning of the year. In fact, arguably since November. So we broke through that last week, and we're looking to see if we've got enough steam to tackle 7,000 as the next point. If we do, that's going to precipitate some more buying again, but maybe this week isn't where it happens. Maybe this week is dominated by US earnings. Okay, well, look, that's it. Trade safe. Tonight, don't miss out on the session, which is we're looking at a trading development plan. So I'm looking at something called results-based trading learning. If you're not in to this, if you're not in on this session, I'm going to copy the link address and pop it into chat as well. You're welcome, Michael. It's always a pleasure to see you here, buddy. Hey, Michael, are you rocking down to Perth for the event on Saturday? That's great. You're welcome, Ross. Okay, guys, well, I'm going to leave that up for a second. And just so you can copy it in. You're welcome, Rachel. Always a pleasure to see you here. Okay, guys, take care. We'll see you tonight. If you can make it along, if you can't, we'll see you in a circle tomorrow. And of course, on the session on Thursday. Take care, trade safe. Catch you soon. Bye-bye for now.